Hello, everybody. I'm Cantonese Cat. Hey, everybody, Cantonese Cat here. Tesla's earning on Tuesday. Whew. Oh, man. It's pretty scary, especially when over the last few weeks, over the last 7 weeks or so, price have went from like the 130s all the way to like 270s. You know, it's made almost like 100% move within just 6 weeks. And it got everybody scared now, especially when earnings coming up. I actually think that there are a lot of people who think that earnings are not going to be very well, which is kind of surprising. Why Tesla would make such a big move is because of robotaxi, and now they're pushing the robotaxi presentations. Doesn't mean that we're going to go down a lot further. I mean, I don't know. Like you can talk about all these fundamentals. I personally think that the whales, the big money, they know something ahead of time. And I generally try to extrapolate what the price action is doing, what the volume's doing, what the whales are doing, trying to figure out what it is that Tesla's going to do next based on information that the general public doesn't have. I don't have any insider information. I don't think you do either. If you listen to my video, you basically you don't have any insider information, right? So I'm going to talk about the upside risk, downside risk. I'm going to talk about the shorter term time frame, longer time frame. My purpose is not to tell you what to do. My purpose is to kind of show you what I'm seeing. So maybe that can also help you to do kind of the same thing that I'm doing. You find what I'm doing to be helpful. Now, with that said, I do everything for free for you. I do have ad revenue that I make from these videos. Maybe my video generally ranges around like $2 to $5 per video. Sometimes I get like $1, sometimes I get like 10. If the video is particularly popular. So it's I'm mostly really doing it for fun. Now I don't know how far to really carry through with this. I do enjoy it, so I'm going to keep doing it. But if you do support what I'm doing, I did end up starting a membership thing here today. If you click on it, all this is just about $4.99 a month. If you want to just buy me some catnip, you want to buy me some cat toy, feel free to do that. You don't have to. If you do that, I'm going to pay more attention to your comments. I'm going to do more in terms of chart requests, because right now I'm starting to get more and more comments. I'm trying to figure out what I should do. I don't want to just try to respond to everybody and burn out. I do want to make more content. So if you do want to encourage me to try to do this more often, or if you think that you like your voice to be heard more, if you want to show that you support me, you can do that, but you don't have to, right? I haven't even figured out what to do yet. Maybe I'll just try to respond to your question, chart requests as much as I can, or if I end up doing like a members video, kind of just like doing a short one, just sharing some unscripted thoughts. I haven't thought about it yet. You can also use my emojis if you want. Back to Tesla. What is going on with Tesla? The very fact is that it got rejected right here at some pretty important resistance level. As you would expect it, it got rejected right here on the top of the Ichimoku cloud, almost to the dollar on the monthly chart. On the 2-week chart, it also had gotten rejected at the top of the Ichimoku cloud, right? So the monthly chart, the top of the Ichimoku cloud is around like 270. On the 2-week chart, the top of the Ichimoku cloud is around 260, right? 258, somewhere around there. So you're really talking about some pretty important longer term resistance that is really finally hitting, and it's having a little bit of a hard time trying to push through above. On top of that, you're also talking about some other resistance level too. For example, on the 2-week, it almost got rejected very, very close to the upper Bollinger Band. You in general, I just don't think that the Bollinger Band should be too far violated. Generally, prices like to stay within the Bollinger Band. Sometimes when price goes up, they like to expand it, or it goes down, they like to expand it downwards or upwards, and usually allow price to kind of go up through time as the Bollinger Band expands, right? But so far, you're hitting a lot of these kind of longer term resistance here. Even on the weekly, it had already gone way too far extended above the weekly Bollinger Band, and it simply just came back down. It's simply just basically touching the upper Bollinger Band, right? When I see something like this, I don't think that the upper Bollinger Band would necessarily hold as support. I generally favor a consideration for price to kind of close back inside the upper Bollinger Band while consolidating a little bit, while you cool down things, because you did have a very, very nice Bollinger Band expansion here on the weekly, But the Bollinger Band expansion just simply hasn't really been good enough for price to go up that much further in a short term. And there's a potential for price to kind of gravitate down a little bit more too. Another thing too is, you have this really kind of longer term bear, how do you say, bear market trend line, if you will. And this whole bear market trend line has been happening for for quite some time. And I think depending on where you draw it, I think that right now we might have hit some pretty important resistance right here, even at the bear market trend line on the log here. And we've just been having a hard time breaking above. It looks like it really wants to break above of it. It looks like it's trying, but we're basically hitting like multiple very strong resistance, and we're trying, and so far we're just having a little harder time kind of break above this range over here, right? That's what I'm seeing. Now, the question is, okay, so great, now you're hitting the top part of the range. Traders are coming in, things look a little bit, just a little tiny bit, actually look a lot overextended, and things are cooling down straight for about 2 weeks. What should you expect in the shorter time frame? What should you expect in a longer time frame, right? I got to say that it's important to think about those two things separately. And because in the shorter time frame, I'm tending to want to do nothing, because I have several scenarios that I'm looking at. Now, the scenarios I'm looking at here would be if I draw the Fibonacci sequence all the way from the top over here to the bottom over here, what you would see is, actually, let me fix that a little bit more. Yeah, you draw the Fibonacci level over here and let's suppose those down here. What you could see is that price has really been trying to challenge this previous high here, and it's been respecting this Fibonacci level pretty well, right? I would also do another Fibonacci level from kind of like the peak of top over here, and that also shows you a little bit of a different picture here. All of these are really kind of how you say it, respecting the Fibonacci levels, especially if you do the top from here all the way down to here, where it was like from 300 all the way down to like 139. What you're seeing is price also got rejected at the equal high over here around the 0.786, and it came back down so far as finding support at the 0.618. Now, 0.618 Fibonacci level generally is, they call it the golden ratio. Generally, is a pretty important support or resistance level. We pushed through it like it's butter just 2 weeks ago. So it's not the end of the world to kind of backtest and maybe form a little bit of a bull flag over here. There is a possibility that this could be it. You just hit the upper Bollinger Band, you hit a very important level here. Earnings may not be as bad as expected. Elon Musk might change his tune in terms of what the longer term expectations are. He might give some, anyway, you can try to justify whatever you want from earnings. Earnings doesn't have to be good. That's the point. Like, it doesn't have to be good. There's a potential for you to just find support over here, right? That's one scenario that I don't want to brush out, because I can totally see that potentially happening right here at the current level. Now, the question is that my preferred scenario? No, that's not my preferred scenario. My preferred scenario is actually for price to gravitate down to either hit the trend line, not from all the way from like October 2021, November 2021, but more just starting from like July of 2023. You also have a trend line over here that that had a couple of touches over here. I would favor either hitting this smaller time frame trend line and then go up, or actually probably more likely is to go back down to 220 to go up. I do not want to rule out the possibility that it had found a little bit of a bottom here, but it's trying to find a higher low. I think that this is a very important trend change. I think that there's enough whales to come in. I think that a longer time frame is bullish, because it's really trying very hard to break this bear market trend line over here. Is trying to do it 1, 2, 3, 4, and now trying to do it the fifth time. This fifth time looks like it's really trying to do that. So that's reason number one as to why I think that overall it's looking better. Second thing is also, you really don't have much retails left over here on the MCDX Plus. You have a lot of wellish momentum on the weekly, on the 2 week, and also on the monthly. You're really seeing significant, over the last 3 months, you're just seeing significant trend change in terms of the wellish momentum, and also in terms of retail. And this means something, I think. Another thing that I also want to show you is that very important to look at this is that the 20-month moving average is actually crawling up for the first time really since we're having this negative sloping since like August 2022. this is the first time that the 20-month moving average is starting to curl up. Now, granted, it's still July. We're right into earnings. There's a potential for price to plummet all the way down. And if that's the case, then the 20-month moving average may not be pointing up. It could be end up flattening out, right? But so far, I have not yet seen something like this where the 20-month moving average is curling up really since like 2 years ago. And this is generally how trend change starts, is when you have a negative sloping 20-month moving average. It's starting to curl up, right? It's trying to signify there's a little bit of trend change because there's a big giant candle that changed the trend, right? And I think that this might be the big giant candle over here that have changed the trend, and the break above the 20-month moving average is not insignificant. Over here, back in June 2023, we did break above it. You know, the problem is trying to back test it, but because it's still negative sloping, it eventually was not able to hold. It fell underneath of it, trying to come back, trying to back test it again, but because it's still negative sloping, couldn't hold, right? Now it's finally positive sloping here. So we'll see how earnings go, but I do see a lot of these longer term thing that are really telling me that things are looking better. And also on top of that, it has fallen underneath the Ichimoku cloud on the monthly here for almost half a year. It's not an insignificant thing for it to just reclaim the Tenkan kitchen, the blue and red line down here, and to get back inside the cloud all in one sweep, and to be so impulsive that it is touching the top of the Ichimoku cloud. I don't think that's insignificant. And even if it comes back down, you know, like there's a lot of support down underneath, right? There is a possibility, I was just showing you, that price might just gravitate to where it is now. And that could be the higher high after, no, it's not higher high. It could be the higher low after forming this high over here, right? I do want to talk about a few important levels. Why do I think 220 is important? Before 220, you do have 225. And 225 to 226, somewhere around here, is a good confluence level. The reason why I say that is because it is hitting this trend line over here, which is also hitting the weekly Ichimoku cloud. If that is the case, then there's a potential for it to bounce around 225, 226 if we end up having earnings jitter. And this whole thing right here was just overextension, and we need to cool down a lot more rather than just holding support here and just range bound and correct through time, because I do think that you probably need a little bit of a correction when you have a big move like that. So there's a potential for it to just kind of cool down through time. And if it's able to cool down through time, then you're talking about maybe not going down further, but the first step is going to be 225, 226 range, right there, the confluence zone right there. The second zone is going to be around 220, which I think is where the blue line of Tenkan or the conversion line is going to be at next week as well. You look at different time frame, 220 also seemed to be a pretty good confluence zone. It would be the bottom of or close to the bottom of the 2-week Ichimoku cloud, you know, and it's also the 0.5 Fibonacci level. It's not like a Fibonacci level, but half is not an insignificant number either, right? Looking at the monthly, that's not really that big of a zone there. But if you're looking at the weekly, and if you are looking at the Super Ichi cloud, around 220 is also where it's going to be important. You know, the important thing here too, like around, I think the Tenkan of the Super Ichi is going to be around like 228. So I think 226, 225, 228 may be an important influence zone. After that, it's going to be around like 220 or like the higher two teens. Somewhere around here is going to be a very important zone. The 2-week Super Ichi cloud is also right around 220. So that's also a potential area where it might end up finding support at, you know. I favor 220. I really do favor 220 because of a whole, you know, confluence zone at the Super Ichi cloud on the weekly, Super Ichi cloud on the 2-week, and also just on the 2-week Ichimoku cloud too. It's just a lot of confluence around 220, you know. So I favor 220 as my primary case, if you will, where price just kind of came back down from earnings. Does it have to happen? No, we're at a support level right now. So there's no reason to think it has to happen. But if it does, I think 220 could potentially be a very important buy zone, if you will. Is it going to hold at 220? Is there a guarantee it's going to hold at 220? No, there's absolutely no guarantee it's going to hold at 220. Is that going to go down to 225 and then bounce up? There is a possibility of that. I just showed you. Could it go down further to 200? Yes, there's always a possibility where it could go down to 200. Because if things end up breaking down below, and you have to understand these risk levels, right? I'm going to pull up here with the bull run support band. Right now is right around 200. On the weekly chart, you can see that right now is around 200. So conceivably, if it goes down, it could hit 200. But if it ends up going down, down, down over time, the bull run support band could end up catching up and hit around 220 and find support confluent with this trend line down here as a back test after its breakout. Maybe 220 is going to be a pretty good zone over the next few weeks. Maybe earning was really start to kind of break it down. You have a little bit of buying pressure from people just feeling it's overreacting, and you end up just going down over time, and you hit 220 when the bull run support band comes up and serve as support. That's also a possibility, right? But 200 is also going to be an important zone because it's a 0.382 Fibonacci level. You also see that as a very important level over here for many, many, many months. You have a very, very hard, time to break above. It requires inverted head and shoulder to try to break above the zone, right? So conceivably, you have big volume breakout. It's not the end of the world. We come back down and back test the area before going up higher. This is still a very bullish sign. If price ends up going down to 200 and they go up higher, that's also a possibility. Do I favor that possibility? I do not. I favor 220 more. It just seems to be a higher probabilistic move for me. Another thing is, if you're breaking down through all these breaking down through all these support zone over here, and which I find to be improbable. You're talking about a lot of support zone on the weekly, on the 2-week chart, on the monthly chart. If you're talking about breaking the weekly cloud, you're talking about Tenkan Kitchen bull run support band, and you hit 177, I think that's probably going to be the lowest it goes. You can, I suppose, try to reserve some money here, but I've been buying, what I'm telling you, this is it doesn't really help me. I've been buying down here, so it doesn't really matter. If I'm trying to load up, which I'm still thinking about potentially adding. I would potentially add more, or try to add as much as I could around the 225, around 220 zone. If it breaks down to 200, then so be it. I just increase my cost average over here for nothing. But hey, I'm seeing some support zone over here. I think risk reward ratio is going to be pretty good buying here. If it ends up going down all the way down to 200, then so be it. I would try to buy it more as much as I can down here too, right? That's kind of how I see it. I don't think there's a right answer to that. The whole point is not to show you what to do. The whole point is to let you devise a plan based on your own risk tolerance, because there's not just downside risk, right? Downside risk I just showed you. 225, 220, 200, 177. You also could be potentially talking about upside risk, which is kind of crazy to think about. What do you mean by upside risk? Well, I will show you what I mean by that. I'm going to get rid of all this crap over here. I'm just going to pull up the bull market support band, and I'm going to show you what happened during last cycle before things went crazy, right? There is always a risk that it keeps going higher after consolidation right around here for a few weeks, because that's what happened last time. There's a lot of similarities in terms of the way that it looks over here. Over here is maybe a little bit more of like a cup and handle type situation, and it just breaks out, right? Over here, I think this might be more of like a inverted head and shoulder type pattern, and it just breaks out, right? Either way, it consolidated down here for months and months, and there's a big accumulation zone. There's a lot of whales that entered after this breakout over here back in October 2019. And there's also a lot of whales that enter over here in this breakout here in July 2024. And it's just formed a bull flag over here. It formed a bull flag over here for a few weeks. And then it just went back up like crazy. It didn't look back until COVID happened. And then you came back down, right? And back test the zone over here. So, yeah, I mean, conceivably, is it possible to just go sideways or even go up a little bit and cool down the indicators? Doesn't touch the support band, doesn't touch the weekly Ichimoku cloud again, and it just keeps on going up. going up, and this time around there's no black swan event. It just keeps on going up. Is it possible? That's always a possibility. That's an upside risk, right? I don't know in terms of like that's why I'm happy to have bought down here, so I don't have to worry about that. If it goes down to some of the support zone, then I can maybe try to buy more as much as I can. But if it doesn't, that's okay too, right? Because I worried about something like this. Because I worried that it would just keep going up. Now, it's not just the Buoyan support band, but it's also the Ichimoku cloud. On the weekly Ichimoku cloud, what happened during the last cycle, it's kind of scary to kind of look and see what how these two cycles are so correlated. During the last cycle, breakout over the weekly Ichimoku cloud, back tested next week on the top of the Ichimoku cloud, and it just didn't look back. It just kept going up, right? What is happening so far at the current area right now? You have a weekly candle that broke through the weekly Ichimoku cloud. The next week came back and back tested top of the Ichimoku cloud, right, on the weekly. And you know, who knows? Maybe it back tested again. Does it have to do that? No, it doesn't have to do that. Can it go sideways, just consolidating a little bit over here, allowing the Bollinger Band to expand, cool down a lot of the indicators, you know, before things going up again? That's always a possibility, right? So I don't want to make you think that these things are absolute. I do want to share with you my thoughts in terms of upside risk and downside risk. If you ask me for my primary case, because there are always going to be some jerks out there, and I block every single one of these. There are always going to be jerks out there that I don't care how many followers you have. There are always going to be jerks out there saying, oh, so you're saying that after all that, I have to listen to you for like 20 minutes, price could either go up or could go down. Thanks. I'm telling you, yeah, that's true. But I'm giving you my primary case, which is that it goes down to 220 before going up again. How strongly do I feel about it? I don't feel very strongly about it at all. But that would be my primary case. I felt very strongly about buying down here, right? I'm just sharing you in terms of the risk levels, both in terms of upsides and downsides. You do what you can. You learn what you need to learn. If you don't find technical analysis to be helpful at all, then, you know, I'm sorry that you spent 20 minutes listening to this stuff. Anyway, a majority of you are super nice, super supportive. Thank you so much for taking the time and listening to this. Have a good one. Bye.